Hello, I'm Bernard Hickey from interest.co.nz and welcome to another in our series of double shot interviews and our regular weekly currencies review and outlook with Dan Bell from HiFX. Welcome back, Dan, to interest.co.nz, and it's been quite a week for us here and in the markets. Yesterday, interest.co put out a story which moved the currency, which came from Gareth Vaughan on the Chinese Sovereign Wealth Fund looking to perhaps spend up to $6 billion in New Zealand assets. You must have been around watching the currency move. What actually happened on the day?
Yeah, I was, and I was looking at the screens. I was like, well, who's lit a rocket under the New Zealand dollar? And suddenly emails were coming out saying that that there was a story released on interest.co.nz that Chinese Sovereign Wealth Fund looking to spend $6 billion in New Zealand, and the Kiwi rallied hard against every major currency.
And as we speak, it's headed towards 82 US cents. That's quite something, isn't it?
Absolutely, yeah. It has been one of the top performing currencies this week. I believe we just made a high this afternoon of 81.70. The all-time post-float high is up around 82.15, 82.20. Which we had back in 2008, so not far off that all-time post-float high.
And it's strong against the trade-weighted index too.
Very strong on a trade-weighted basis, trading up around 3-year highs there. We've strengthened significantly against the Australian dollar, for example, from sort of lows down around 73 cents a couple of weeks ago to over 76 cents in the last 24 hours.
It's worth digging into that Australian-New Zealand dollar cross because it's been really quite strong the last couple of weeks. We're off on our own tangent in a way. What's going on there?
It's kind of, in a way, it's difficult to sort of reconcile by just looking at the data. I mean, we've had some positive data out of New Zealand this week. Fonterra's payout obviously being positive. The RBNZ's inflation forecast being higher than expected. So we're seeing the interest rate differential between the Kiwi and the Aussie start to tighten up. But I think the Aussie dollar in general has been weaker than expected against the US dollar. The New Zealand dollar has obviously been very strong. So a lot of currency sort of traders, if you like, have been playing a short Kiwi, long Aussie position. Over the last few days, we're seeing those positions getting unwound. So we're actually seeing people dumping Aussie dollars, buying back into the New Zealand dollar. So positioning is part of the reason why the Kiwi has been so much stronger against the Aussie dollar, and obviously that news yesterday.
And the Australian dollar down quite a bit against the US dollar too. What's going on there?
Yeah, earlier this week we had the Aussie dollar drop down to a 5-week low of 104.30 at the same time that the euro versus the US dollar broke under that key 140 level. So at that time, I think you had the market obviously looking at the potential for a bigger dip in the euro versus the US. A bit of risk aversion, uncertainty weighing on the market. The Aussie dollar is one of the most traded currencies in the world now. It's up in the top 5 most traded currency pairs in the world.
That's amazing, isn't it? Because it's obviously not that big an economy, but it's very open, easy to trade, and often people look at it.
Yeah, they do. And I suppose if you're an offshore investor or trader looking at the China story and wanting to trade a liquid currency that reflects that underlying backdrop, the Aussie dollar is one of the best sort of plays to try and get exposure there. So the Aussie dollar has been one of the strongest currencies over the last few years. Obviously, topped out at 110 a few weeks ago, but sitting back around sort of 106.5 today. So off from the recent highs, and the commodity volatility is having an impact there. Being a more liquid and more traded currency, it tends to actually react quicker, I think, to commodity price volatility than the New Zealand dollar does.
Now, looking at Europe, more ructions this week with Greece, the euro all over the place. What are people looking at there?
We've had no real resolution from Europe. The IMF came out last night with a comment that they were potentially going to hold back one of the aid payments to Greece.
That must scare a few people.
Well, you got to wonder what's going on there. There seems to be a lot of conflicting, things going on in the background. So on a political level, obviously there's some big issues going on there. On a bigger level, I think we know that Greece is essentially insolvent, and policymakers continue to talk about sort of kicking the can down the road. This whole sort of idea of blending and extending, their debt, to a later date. But the reality is, with debt to GDP ratio up over 160 odd %, an economy that's essentially in a recession, if not a depression, I don't see how Greece is going to get out of this without someone taking a haircut.
Now, if someone does take a haircut, and that includes the European banks and potentially the European Central Bank, what impact could that have on markets and currencies?
Well, without a doubt, there'll be some kind of contagion, impact, where wholesale credit markets will react to that type of news. I mean, it's difficult to know for sure because obviously it's not in the best interests of the euro region that the Greek are in a position where they default on their debt. And I suppose we have to be, to a certain extent, humble about what we don't know, but it's not going to be good. I think you've got people that are certainly smarter than I am talking about the potential default in Greece being kind of Lehman style, sort of Lehman Brothers sort of impact. Where wholesale credit markets will feel a big impact from that.
So we'll all keep an eye on the Uzo crisis, as some people call it. Now looking at that relationship between the euro and the US dollar. It's rebounded a bit this week. What's going on there in the connections between the European economy, the US economy, how people see the relative strengths of those two?
Mm-hmm. Yeah, the euro dropped down under that 140 level, but has recovered back around sort of 140, 180, 142. On the back of some weaker than expected US data over the last few days. So first quarter GDP numbers out of the States came in at 1.8%. The market was expecting somewhere around about 2%. Their core durable numbers also coming out weaker than expected this week. So you're seeing some softer data out of the States. Obviously, you've got some analysts talking about the potential for some type of QE3 to emerge in the next few months. It's really difficult to say what's going to happen there. I think part of the weaker US data has been the disruption in the supply chain from Japan. I think people have underestimated the impact that that's had around the world. So we're seeing some weaker Q1 data come through the markets, I don't think the US is in a great position, but perhaps the recent data has been a little bit sort of overanalyzed.
Just looking ahead for the next couple of weeks, what are currency markets going to focus on?
Well, the European situation, and I think people are going to have to start. We're going to have to start to get a bit more clarity about what's going to happen with the European debt crisis, and particularly with Greece. The situation in the US, we've got employment data out of the States next week. The market's still expecting some growth in employment in the States. I think the equity markets, it's funny, overnight, the equity markets were reasonably sort of subdued, yet the sort of risk-on trade today has been quite positive, so the Kiwi obviously being very strong, the US dollar weak again. So I'm just wondering if the markets are just a little bit confused at the moment about what's sort of going on. There's certainly enough uncertainty out there to create more volatility next week, that's for sure.
And then the week after that we have the Reserve Bank's monetary policy statement, which will be the big thing for people to watch in this part of the world at least.
It will, definitely. With the New Zealand dollar on a trade weighted basis 5% above where the Reserve Bank was forecasting it to be earlier this year, you have to say that the currency is going to be taking a bit of steam out of our economy. So it's going to be interesting to see what the RBNZ have to say about that, and perhaps what the monetary policy statement, if any, impact on the currency when it's released. And
whether or not we have an earlier increase in the official cash rate after these quite strong inflation figures this week.
That's right, yeah, the RBNZ's inflation forecast numbers much stronger this week, and I suppose the market is actually starting to question, I think, some of the forecasts from the earlier forecasts from the RBNZ, and start to ask, maybe we're going to see, interest rates have to start to be normalised earlier than expected.
Excellent. Dan there, Dan Bell from HiFX. Action aplenty again on currency markets. We'll be back again in a week's time. That was our weekly currencies outlook and review. I'm Bernard Hickey for interest.co.nz.